Hi guys, we're back. Light Forex Broker, I'm Roy Cuzin. Every Tuesday and Thursday, I'm right here to give you the good stuff, so don't miss out. Today we're going to have a special session. In fact, every first Thursday of every month, we're going to have this special session that I call Forex Portfolio Overview. And this is where I present to you my portfolio, my Forex portfolio in real time. My open positions. At first I'm going to present to you my open positions, then we'll take it to the chart. We'll analyze every single position, and I'm going to have you my full analysis, all of my insights with regards to what's to come, and the technical picture and so forth. So it's going to be really interesting. Let's go ahead and take a look. Let's go through my positions themselves. 6 positions I have in place. Let's take a look. Alright, so here's my situation as of today, 4th of October. I have 6 positions in place. Euro versus the pound, I sold at 88.97. At the moment, it's up 25 pips. 6 days ago was established. Euro versus the Australian dollar, short position established 3 days ago. And this is actually the worst position I have at the moment. They're all doing pretty well, but this one is doing very poor actually. 130% down and 30 pip down. New Zealand US dollar, this is the 3rd position. Short position entered 9 days ago at 66.37, up 145 pip. My top favorite position, no doubt, this is the USD versus the Swiss Franc. I bought at 96.15. At the moment, it's actually more than 300 pips right now. 9 days ago was established. Really nice position. We are pretty much in the middle of the way to our to the target. Euro versus the Canadian dollar, also a short position. 49.15 was the entry level. At the moment, we are registering about 135 pip profit. And last but not least, that's the gold. Short position was established 30 days ago at 1200. At the moment, we're up $38.5, but I have to say that I've been playing around with this, with the gold movement. The gold was pretty volatile. It was moving in the last couple of weeks in a tight range, up and down, and I was able to get in and get out, and we've done pretty well so far. But we're still aiming at a particular price target, so unless that price is going to be taken, either that or the stop loss that was going to get caught, we're going to stay in this position. Let's take it to the charts, and I'm going to show you exactly the technical situation of every one of these positions. Let's go ahead. Alright guys, you're looking at the gold right now. This is the daily chart, and usually what I will do here, I will present to you the long-term perspective, the bigger picture, which obviously presents the major trend, right? The underlying direction of the trend, the big trend. And I'm also going to show you the daily chart, which mostly refer to the local price action, kind of more short-term perspective, so to speak. And here, let's start from the bigger picture. Actually, the bigger picture here was all about a downside move that had started roughly about 3 months ago. Price was trading around 1350, 1360, and started to come off pretty strong. And I was actually involved in this downside move, but this particular position in place right now had been initiated when we saw price break this massive key level, very strong support, 1207. That was my main point of reference. And when price crashed that level, I was basically waiting for the right moment to strike and to establish a bearish position just to continue on this downside move. But I wanted to, fine-tune the entry. I wanted to get in a good price locally on a local scale. So I thought that price was actually very probable to go back up, pull back, and touch base with that same 1207 from below. Usually that's something that happens. That's quite common, where price comes back to kind of retest that same level it broke, and the same level that was once a support turns into resistance. Now, well, especially if you're looking at a strong level, a strong key level such as this one. So the 1207, I was waiting to see the reaction where price was engaging with that level from below, and I saw these spikes beginning to form, right? That was the first indication that this 1207 level is an important pivotal point. You know, the point of no return. Once crossed, price doesn't look back. It just continues on the same direction. So I decided to take this as a trigger for my bearish conviction, but I wanted to fine-tune that and try to find a setup that I can apply from the local price section. And I actually found one. So I'll take you to the daily chart, and I want you to focus on the red setup, the red system that you see here. These four red lines, and also the 1207 itself, right? So I'm telling you the daily chart. You can see this is where I began to become really interested in taking action. I saw price when it came back to flirt with that 1207. I noticed that it was starting to trade sideways, but when it did, it was basically trying to challenge that same 1207. That was the first attempt, right? And you can see how it failed. It just left a spike and closed back below. Then it went for a second attempt, right? Take a look how that ended. So when I noticed that, obviously what I did, I just increased my bearish position. I initiated this bearish position roughly around this level when price was just engaging for the first time with that 1207. But then I found these levels here, these attempts to break and fail, right? Failure to break as an important point to increase the position. When it dropped all the way to 1182 right here, I saw the reaction. I saw price was unable to break through and beginning to turn around. This is where I closed most of the position. So I took a massive profit at this point, and I was waiting to see if price can push back again to the same level, 1207. Amazingly enough, it scratched that level and closed back below. Take a look at this one, 1201, which is a weaker level, definitely weaker than the 1207. This is a local resistance. I mean, it was a resistance, right? Then it was a support. It was supposed to be a support, but price completely crashed it yesterday. It touched base on that 1207 and came back to close below that level. I think that's a strong signal. From a short-term perspective, I think the signal stands for price maybe beginning the move, all right? The move that can take it all the way to my price target at 1173. That's an important key level. That's a very important, that's the mid-low key level of this red system. So that's a big one. So I think price can go all the way to 1173, and I actually think it can drill far lower than that. Take the previous low, right? The previous low, let's take a look at this particular level, 1160. So I think it can reach all the way and take the previous low, but we're going to be focusing on 1173 as the main price target. As long as price remains below 1201 and 1207, I mean, you can consider these two levels as a range, as a very strong resistance range. As long as price remains below that level, I think it will continue on the downside, and that pretty much fits our fundamental point of view, because fundamentally speaking, we are long the US dollar, right? I mean, if you haven't followed us in the previous couple of weeks, go ahead and check out older sessions that we had. You can see that I'm very long, strongly bullish on the US dollar. So this, if the US dollar is to remain in control here, that means that the gold is going to continue to push downwards. Alright, second position I have also long US dollar. In this case, we are short the New Zealand dollar, right? Short New Zealand dollar, long US dollar, and we're doing pretty well. I think around 100 pip or so, maybe a little bit more than 100 pip. And here the situation is quite remarkable. We have a very impressive sideways movement right, that you can track back all the way to the middle of 2016. This is a very wide trading range that had just got broken. I'm talking about a few weeks ago. I was watching very closely. I was monitoring the whole time. I was actually doing pretty well with the legs, with the inner legs themselves. I'm talking about these legs, right, within the trading range. Every single leg here can represent just a pretty well-established trend, right? So if you know the next leg, you pretty much know where's the next trend. The next trend is going to go. And in this case, it was the fifth leg that was beginning to break out of the setup right here. So and since it was the fifth leg, I was quite reassured that price will not only break out of that system, but also go to a particular Fibonacci projection level, which helped me to determine my price target. Now, in terms of principles of the C matrix, when it breaks out, when you have a breakout, like in this case of the New Zealand US dollar, what I do is I look for the previous opposite significant move. It's usually the fourth leg, right? So in this case, this was the fourth leg. Without getting too deep into the principles of counting the legs, this was the fourth leg, and I applied a Fibonacci projection analysis, mainly a very particular level, 1.618. This is the most important Fibonacci projection level that I always use. So I applied that level on this move, and I found that this particular level falls exactly here, 63.60, and that became my price target. Now, the only concern I have at this point is the 65.1. Take a look at this level. This level is the bottom key level of the red system, right? This is the local setup. And although price looks like is breaking that level as we speak right now, I wouldn't jump ahead of myself, all right? I wouldn't get too excited, because that can actually be a false well, it can actually be just you know, we should wait at the end of the day, right? Because the close of the day can give us some indication whether we're going to see a breakdown or not. I definitely hope for a breakdown, but I will not be surprised if there's going to be left just a little bit of a spike there and price will basically close above 65.01. At that point, I will consider to close the position entirely. Alright, because at that point, if price is not going to be able to break through, there's a very, very serious concern. It's going to go and produce another upside leg, and I don't want to be there if that happens. Alright, I'm going to split, I'm going to take profit and get out. Unless, of course, it does break 65.01. In that case, I will just continue to increase the position here on the downside all the way to 63.60. Alright, that's the game plan. Now, here are two indications that we are on the right track. First, this attempt to break above 67.14, the biggest level we have here, the biggest key level, our main point of reference, that was failed, right? The second attempt to break above 66.84, which is a local resistance, also failed. Take a look. So I think, and right now, obviously, we're challenging the 65.01. I think we're good on the downside here for quite some time. Should be interesting. We got the euro versus the pound, guys. Euro versus the pound. This one is really presenting an interesting technical picture. Let me take you first to the weekly chart. So here, it's a very wide, very big trading range, obviously. You can track this one back to the, well, also to the middle of 2016, roughly to the end of 2016. But it is far from being well established. We only have here two legs. And I'm talking about the big system. I'm not talking about the blue system right now. Alright? So we had two legs so far, and right now I will try to convince you that we are in the middle of the third leg. The third leg is, well, it happens to be it's probably going to be a 3-segment leg, which means we had the first segment going down, Believe it or not, this really extraordinary tight sideways movement is actually the second segment, and right now I think we're beginning the third segment that will end up in the lower section of this big blue system here, starting with the level of 85.31, which is my price target. This is my final destination. But right now I want to zoom in, I want to take it into the lower scale system here, the black system, because what I think is going on, I think we're having here the last leg, right? The last leg that should break out of the system. I think if I read this correctly, and I usually do, these are the situation with the legs themselves. We have the first one going up, second all the way down, third all the way up, fourth down, fifth all the way touching base with the top key level really nicely here, and beginning the sixth, turning around, beginning the sixth leg. I think this is the sixth and last leg, which will break out of the black system and drill well into the lower section of the big setup. I'm going to be very much satisfied with reaching 85.31. That's the safest place, so to speak. Let me take a look at the daily chart. Also quite interesting what's going on from the daily perspective, because when price began to come off that top key level 91, that was a big sign, right? The fact that it was unable to break above that level, started to fall back, but in the way it generated this really nice head and shoulders pattern, right? This was the left shoulder, this was the head, and this was the right shoulder. Now if I'll take a trend line, something like this, for example, let me just cut this thing off. So you can see I can cross a trend line here, and you can see exactly the moment this head and shoulders pattern was broken. This is the right implementation. So it got broken and it came back. Actually, this is the second consecutive bearish campaigns that I have on the euro pound. The first campaign was successful, but much less successful than I expected. I started right here when price was when this head and shoulders pattern was breaking. When it was breaking, I established a bearish position. It went well for the first week or so, and then there was a massive move upside, right? Just incredible upside correction in one day. Luckily, I was managing my stop loss level pretty tight on this one, and I was able to be stopped out in a small profit, but much smaller than what I expected initially. So I waited on the sideline, and I felt that I'm going to have a second chance here on the downside. So when I noticed that price was kind of hitting that neckline that got broken, right? That neckline of that head and shoulders pattern, just touching base, kind of retesting that level, that level from below, I knew that there's going to be a second chance here. Price started to fall back, started to fall downwards again. So I initiated a second bearish campaign here on the euro pound, and although I told you about the final destination at 85.30, there are two more very important secondary targets. The first is right here, 88.13. That's only 60 pip from where we're trading right now. That's definitely a short-term price target. Now, I will take some profit off the table at that point, but I will hope to chase the rest of the way to 86.77. So if price is gonna have a easy break, I will probably continue with my full position. If there's gonna be a reaction here, I will probably close some of the position and wait to see what's gonna go in the next few days. I think eventually price should break the level and head straight to 86.77 and do the same with 86.77 and continue on the downside. Obviously, it probably will not be a straight line. It will be bumps along the way. So yeah, bearish outlook on the euro pound, very much bearish still. My top favorite position, this is the dollar versus the Swiss franc at the moment, presenting a very interesting case study. Let me take this one. This one actually belongs here on the daily chart. So here's the bigger picture. Alright, I'm starting from the monthly chart. This is the bigger picture. Massive trading range, right? You can track this one back all the way to the beginning of 2016. And it's pretty well established. We have first leg, second leg, and third leg down. I will try to convince you that we are right now in the middle of the fourth leg, going upwards, right? I mean, after price touched base really nicely on the bottom key level here, 92.35, it began to turn around. I actually knew at that point that we're shifting from a downside trend into an upside trend. I mean, don't forget, this is the monthly chart, right? It's the bigger picture. But I started to follow the USD Swiss franc on the upside, always getting in and getting out, but always on the long side, according to the bigger picture here. Now, price, whenever price starts to move from one section of the setup, it usually ends up in the other section, and vice versa. So when it started to turn around, I was expecting it eventually to reach the higher section, right? The minimum level here is 101.17, 101.18. Now this is actually my official price target. This is my main price target, right? I have two price targets. This is the main one. I have a second one higher than that at 103.40. Now 103.40 happens to be the previous major highs. It's not even a high, it's highs. It's two highs exactly at that point, right? So from a bigger, from a large scale perspective, when price was on the downside and touching base on the bottom key level, it took the previous lows right here. Usually when that happens, it does the same on the other side. It chased the previous high, which is why I expect price to hit eventually 103.40. And 103.40, guys, that's more than 400 pip. I mean, I'm already up 300 pip, but there's more. There's more 400 pip in the pipeline, and that's a lot, right? I mean, if you want to go with the safest move, the safest play, that would be 101.17. Now, let me tell you again why I think we're going to continue to go upwards all the way to that higher section. In the middle of the way, going up from the bottom, price started a downside correction. Take a look. I mean, for the past 5-6 months, it was all about a downside correction. It reached the middle of the range and started a downside correction. But take a look at this. This is really remarkable stuff. This is the power of the symmetric setup, right? This is the sheer power of the symmetric setup as a predictive system, because you can clearly see how price on the downside, when it was correcting, it was challenging that 96.51. I mean, it was trading well below that level. Just think about it. For a big portion of the month, price was actually trading below 96.51. On its lowest point, it was trading at 95.40, right? Well below that level. But as the month progressed, it went back and it was starting to leave that spike, and I kind of sensed that it's going to close above that level by the end of the month. And as far as I was concerned, that was going to be the final confirmation that the downside correction had indeed ended. And we're about to engage with the third upside segment, probably the last segment going up. And like I said, should end up roughly here. Roughly around here. Now, let me take you to the daily chart right there. Here, there was also an interesting element that I could talk to you about. This was the local price action. Basically, what it did was when it went down, I noticed that there was this really local trading range that was starting to form, namely these legs. Take a look. First, second, third, and then the fourth. which broke below the bottom key level here, 96.24, but then it came back up. And you know, the daily chart is usually involves a lot of noise, so I don't fully trust the daily close. This is why I always look for the weekly close and the monthly close for reconfirmation, right? But when I noticed that price came back and based itself above 96.24, I mean, when I noticed it was turning around, right, this particular 3 bars, this is what we call a morning star. This is a Japanese pretty strong reversal pattern. So when I saw that happening and price was coming back on the upside, this is where I took action. This is where I entered the trade, and at 97.40 I actually took a big portion out. About 50% of the position I took out because I was concerned about another downside leg. Then I saw price breaking above that 97.94, the top key level, and I knew that, you know, this local trading range is over with. Price is over with this trading range, and it's going to be all about upside move all the way through. So obviously we have a huge upside momentum at the moment, which is good. There's probably going to be a downside correction, right? We had a strong, very intense upside move. I can expect a local downside correction here, but the bigger picture is quite clear. We got the safe level at 101.18, and we got the extra move that we can extract here all the way to 103.40, so it should be interesting. The next one is the euro versus the Canadian. Now, euro versus the Canadian dollar short position. I really like this one, to be honest. Here you can find, you can find my system. Definitely, you can find the symmetric system in place. All of the key levels are in place, and there's actually a pretty strong and solid sideways movement. Let me quickly show you what I'm talking about. From the monthly perspective here, you can see I want to focus on the blue system, right? On the blue system that presents this trading range. Take a look. First leg here, second, all the way down, third, all the way up, fourth. Take a look at this touchdown on the 59.20. That's the top key level. Really nice spike here. Price was unable to break above and began to reverse. And I think we are in the middle of the fifth leg, right? Fifth leg that should come off all the way from the higher section to the lower section. Starting with this level, take a look, 43.92. So we're talking about 400 pip. I'm already up about 150 pip, but there's more. There's 400 pip more in the pipeline here, right? So that's a big move. That's actually a classic swing move. Now, from the symmetrics point of view, that's a strong bearish conviction, no doubt. But let me add a few more elements to the table. Take a look at this really impressive head and shoulders pattern, where the tip of the head was the move that almost reached the very top key level and began to turn around. So we had the left shoulder, a massive head, and the right shoulder. And then price began to break. It broke below 49.86 here. Take a look at this just recently, this gap. Price basically jumped pretty much above that level and began the negative momentum. So I was right there to catch it. I think price can actually continue on the downside all the way to 43.92. That's a big move, I know, which is why I'm going to play with the position, right? I'm going to increase and decrease the position according to the actual move. If it's going to go strong on the downside, I'm going to take profit. If it's going to correct upside again, I'm going to increase the position again. But on focusing on this particular level, 43.92. I should also mention a secondary target at 145. So that's not too far. A little less than 300 pip for a secondary target at 45.05. All right, nice head and shoulders here, combined with the symmetric setup, usually creates a very strong trading opportunity. We'll see how that goes. So yeah, we got all these 5 positions doing very well. Mostly the dollar versus the Swiss franc, I would say. and this one, Euro versus the Canadian, actually does very well. But we have a poor position in place also. This is the Euro versus the Australian dollar. Right now carrying about 130 pip loss. Now here the bigger picture was actually very promising. As you can see, we got a massive trading range. You can track this one back, believe it or not, to 2013, right? It's probably one of the oldest trading range you can find in the market. And it's also pretty well established with the first leg here, second leg, third leg, fourth leg. Fourth leg was just touching base with the top key level, 63.35, which usually brings to a full-fledged reversal. Now, bear in mind, this is the monthly chart, right? It's too crude to actually trade on. I'm just using this as my, my guideline, as the underlying trend, so I can see that there might be a massive reversal on a large scale, right? So, but that's like I said, that's not enough to trade. So I definitely, every time I have this type of setup on a monthly chart, I need a second setup on the daily chart, or at least a weekly, to help me pinpoint the actual entry, right? So I actually found one. It was right here. Let me bring it to the weekly perspective as well. It should be there. So this is the local setup, the black system here, and I was mostly looking at this particular level, 60.87, as my main point of reference. That was actually the trigger. That was the trigger to enter a short position, and it got triggered, not by the daily close, but actually by the weekly close. This may actually been a false breakdown. Usually the weekly is pretty reliable, but I guess in this case I got fooled. Price closed below 60.87, but it quickly turned around. Now I have a small position in place, relatively small, 20% in position size. So I'm not too concerned about this one, especially when all the rest are doing so well. But I have to say, I actually kept this position in place, even though it's pretty close to the stop loss level. It's only 50 pip from the stop loss level, which is at 62.50. I decided to keep this one intact mostly because I think that this particular level, take a look, 61.89, can actually hold. Right now it looks like price is beating that level, but I think that level by the end of the week can actually hold, maybe even by the end of the day. So price may actually go back on the downside, but I have to say this. If price by the end of the week, which is in 2 days time, 48 hours, if it doesn't come off all the way below 60.87, if it doesn't close the week below 60.87, I will have to part ways with this position, take the loss and go, look for opportunity somewhere else. Right? That's the game plan of this particular scenario, where price will continue to push forward. If it will come back down and close below 60.87, game is on. Right? We're definitely going to carry on with this bearish position. Right now, it doesn't look too good, I have to say, for the euro versus the Aussie dollar. All right, guys, that's about that for this special session, the Forex Portfolio Overview. I hope you enjoyed it. I sure did. Don't forget to, for those of you who are not subscribed to the channel yet, make sure you subscribe. For those of you who don't have an account and follow our leads on a weekly basis, then you definitely should consider that. Also, we're doing pretty well, and my intentions are to continue doing pretty well, so you might as well join in. Anyway, guys, we'll see you in the next session. Have a great trading day. Bye bye.